Welcome everybody to another vlog, and today we are talking about the most hottest IPOs to come in 2019, so stay tuned. If you're new to this channel, we are talking about daily vlogs that I'm putting into the internet about stocks, stock market, IPOs, and to make you the better investors. So I really appreciate that you are coming to this channel, and if you're coming back, I love you. Make sure to smash that like button to help this video and all the videos go up into algorithms so we can reach more investors to build a community. So let's dive into the first stock, which is quite interesting. It's called Peloton. All right, so Peloton is a manufacturer of fitness gadgets. So they do treadmills and bikes and so on, but they have something special. They are digitalized, how I would call it, because they have like a screen, and through this screen you actually watching live classes that are promoting you to do more fitness on the bikes or the treadmill. You know, there's like live classes, there's on-demand classes, coaches that, you know, train you and let you know and push you, you know. So this is very interesting product, but you have to pay for it. So a bike costs around $2,000, and a treadmill connected to their program, it costs around $4,000. And the streaming of the classes is an additional monthly subscription of $40 per month. So the business model is great and very interesting, because it's once you bought this gadget, it's like every month's recurring revenue for the company. And we know that everybody wants to stay fit, and the people get more cautious about their outside look and how they look, how the body, how they feel, healthiness, and so on and so forth. So I think super interesting product. They doubled their revenue last year to 900 million US dollars, though at this point they lost about 250 million US dollars on this revenue, and their valuation is about $7 to $10 billion, and they come to the market as soon as September 2019. So definitely a stock that I will watch. So let's dive to the next one. The next one is an app that you guys already know if you're in the investment niche, because if you already invested in stocks and live, for example, in the US, there is the app very popular, not only by retail investors but also millennials, you know, because the app is very nicely made, and they advertise with zero trade costs. So actually they make money by putting a little bit of a margin on the stock price, so you don't feel like you get charged for the trades, but you actually pay for the service. Though the co-CEO Beth has confirmed plans for the public debut, but exact date was not mentioned yet. In their IPO bus, they also told that they will introducing some premium trading features, you know, same model with different apps, that, you know, they have this freemium model, which means the app is free, but then inside the app you have some premium features and so on. This is very common these days in apps. And according to Alpha Cushion, which is like a research company, they estimated that Robinhood makes around 69 million US dollars revenue in 2018. So very interesting how the stocks will survive the IPO. And you know, lately, you know, we see that Uber and Lyft, you know, the companies, this very much anticipated companies, get slashed and slaughtered on the stock market, especially when they are losing money, because the way to profitability is really long. So some investors say, you know, let's short the stock and let's get out of it. So quite interesting how the stock will do on the market. Let's go to the next one, which is Postmates, which is another very popular delivery service in the US. They have around almost 3,000 cities and areas that they are offering their services, and they have raised another 225 million at a 2.4 billion valuation at the company, and they are saying that, you know, they raised this money actually just before going onto public market. And this is something that usually startups, tech startups or startups they are losing money do usually when they going into the IPO. They trying to, you know, make another round of investment to finance the months to the IPO, and IPO can be very, very expensive for a company because they have to pay the banks and, you know, all the roadshow where they market this company to different investors and big investors. It costs a lot of money, and that's why they are raising this money beforehand to go into the market and be traded on the stock market. Though, as you know, the food delivering business and niche has a lot of big players like DoorDash, Uber Eats, Grubhub, and so on. You know, they have some very important backers, though, founded in 2011, so just 8 years old company. Spark Capital Founders Fund, which is basically the fund behind, or the man behind fund of Founders Fund is, for example, Peter Thiel, who also invested in Facebook and so on. Uncork Capital, Slow Ventures, Tiger Global, and BlackRock and others invested into this company as main shareholders. They completed about 5 million deliveries per month, which is, you know, a lot, and a record revenue of 400 million US dollars in 2018. There's not exact numbers though available yet. Before IPO, they have to disclose that though, so let's see when they're coming onto the market. We know more, we will follow here on this channel, so make sure to subscribe and smash that like button. Thank you very much. Let's go to one of the famous IPOs that everybody is waiting, which is WeWork. So WeWork, I just made a vlog about the IPO just recently, so if you want to go in depth on that, make sure to watch all of my other videos. And we are looking at $900 million loss, so almost $1 billion loss, guys. This is huge, you know, on revenues of 1.5 billion. This is, in my opinion, very, very, very high. So that's why, you know, as the market get, you know, the bull market is, you know, just getting ridiculous, but companies like Uber that are not profitable and coming with a big valuation on the market just get slaughtered, as I said before. So WeWork actually wanted to be already on the stock market this September, but it seems they are pushing it to see really if, you know, there's much interest, how many investors and big investors they can win for investing in Uber in the IPO. So they are valued in a recent investing by SoftBank, which is one of the biggest venture capital companies in the world. They got $2 billion additional dollars, and this valued the company at $47 billion, which is huge, you know. Their business model is quite simple though. They long lease good locations around the world and you know, refit them to make it a nice startup feel office, and then they rent these offices by office or by space for subscription basis, and they try to get more than they rented it for. So it's quite simple and interesting business model, but it seems that the way to profitability is quite long. So let's see how this develops. And another critics is that the CEO and founder, Mr. Newman, has a lot of voting rights inside the company. That's why some people are, you know, if we are betting on this WeWork company, we are betting on Newman. So it's quite interesting how this develops as well. So let me know what is your favorite here on this list. I think these are the 4 most to watch still to come 2019. I love your feedback on every of my videos. I'm vlogging daily, so make sure you stay tuned and don't forget, invest with Danny West.